Okay, so yeah, we're all here for the same reason, and goals and education and networking and results. And when we put stuff on here, haves, wants, and coming soon, we let you know what happens with it. In June this year, we started planning to list 1700 South River Chase in Eagle. It's a single family home with 4-car garage, and we were thinking, we're going to be below $1 million, but for sure in list price. But the closer, the better is what we were thinking for our seller client. And then a lot of work ended up happening to the property. And by the time we got it to market, we listed it at $850. And would you know it, it is still active. Can you believe it? So if that is not a sign of some changes that have been happening that we'll go through today, I don't know what is. But it also seems to me like it's in that screaming deal category. Probably not necessarily a rental property, but investors, we seem to just like real estate, and you never know when we're looking for something. And so the reason that this maybe hasn't flown off the shelf also is while we did all the things, full interior repaint, full interior flooring, the master kitchen and the bath, strike that, reverse it, the kitchen and the primary bath are a little bit dated. Great layout, great everything, but those are two real important rooms, and we just didn't want to put someone else's dream house into action. And a lot of times at this $850, $750 and above price point, people start getting less creative and less they want it to be all done for them. So the master bathroom, the only concern there is it has carpet in it. And the kitchen, the cabinets are fine, but the doors are, not exactly shaker, which is what everybody and their mother uses today. So hardware, shaker cabs, and you've got a perfect kitchen. And the countertops are indeed hard surface, but they're that Corian, which is very durable. But now we're using granite and marble. Also not on the market. Well, this is on the market, but not what nobody else knows. What you're hearing here first is that it's about to go down in price, $25,000. And it's only 2 years old, this home. And it's a 3-bedroom, 2-bath, 2-car garage, but it also has that bonus room. A lot of times when Tony and I will help a lot of investors pick up single family homes, and as cap rates on multifamily properties have gotten squeezed, as prices were soaring and going higher and higher and higher, cap rates went down. And when they start to be almost similar to a single family home's cap rate, you start to go, well, gosh, single family home, easier, fewer moving parts, appreciation not based on rent. And you're going to have two potential buyers, an investor and an owner occupier. And especially then when you're able to pick up something only 2 years old, that also is an easier purchase. And so this similar homes are going for more brand new, but when they're brand new, remember you've got an automatic napkin number would be 7,000, 10,000, 5 to 10,000. Of putting in the back fence, putting in the back sod, putting in the back sprinkler, depending on what the builder keeps out on, skips, needs for us as buyers, putting in the fridge, and if you choose to provide a washer dryer, putting that in. So buying something 1 year old has mini blinds, that's $1,500 right there. All that's done for you. So I'd almost be just as excited about buying a 2-year-old property as a brand new property. And this is what this one looks like. It's in a CBH neighborhood, and brand new properties are going for more. It was priced at $525. Now, probably also a symptom of what we've seen. Prices were soaring, soaring, soaring. Everyone kept pushing the ceiling. The floodgates were open, and the people were coming and bidding them up. And then, bam, the flood subsided a bit. New buyers were not entering the market because they were like, whoa, I don't really like swimming that much. And then sellers, in the meantime, got the memo, and they're like, whoa, they're going to give me that much for my house? I'll sell. And our phones started ringing with sellers. So the tide very quickly kind of did a shift. And what do we think is going to happen? Well, it's tough to say, but a lot of folks feel differently. Some folks are like, oh man, this bottom is going to drop out. Others think we got a little crazy in the COVID, in the pandemic, with an influx, and now it's just going to kind of stabilize here. We pushed it a little too far, and it's going to stabilize. I don't know what is going to happen in the future, but what I can tell you is my favorite accountant in the world, who is my accountant, who happens to be sitting right there, Arla Kester, said, don't bother 1031ing your equity on something you're selling if you're going to pay too much for something. And I said, okay. And then I said, oh, but I found something. What if I just like it? I don't think I'm paying too much. She's like, okay, go ahead, 1031. And so I'm buying in this market, a brand new single family. So anyway, a lot of cool stuff in this market update. But it's also good to know what's off market. Brent, this is in your neck of the woods, this one. I sold 2 fourplexes on Driscoll, and the owner of the other one said, if you can get me that much for mine, I'll sell 2. So, so they want, I think there's a ability to make some adjustments for the fact that that fourplex is going to need a new roof and it'll be a pricey one. The one I sold, the siding is not perfect in that community, and the one I sold had that addressed. And then rents are low and haven't been pushed, but the neighborhood does have the ability to push rents. Can't over improve, but right now the numbers are, not super exciting. But the way I run reasonable market numbers, a 4.4% market cap is feasible. But when I'm running my numbers on this, I'm setting aside $100,000 or something, to put into it. And that, anyway. So a lot of the inventory that we're seeing hitting the market is indeed requiring a little bit of attention, some dollars. It's not perfect. We got untrained as sellers from having to make everything perfect, and now it's time to start perfecting it again. And that is a great segue to affordability overall. Who in this room saw this article in one of the many publications, whether it was the Seattle Times, on single family home affordability in Boise now being second most unaffordable in the entire continent? Did you guys see that? Yeah, it's the world, right? Let's talk about that. You guys have some thoughts on this. I know you do. Thoughts? Brent? All relative.
You know what I mean?
Mm-hmm. So you're saying the overall price point is still much lower than our West Coast counterparts.
Yeah.
Quality of life better.
I totally understand that. House in Spokane, half the price. So you're right. I mean, it's what relates to.
So the relation to other markets, that's a really good point. And also, some markets cheaper, and you'd pay old home prices for the Spokane equivalent of the North End. But if you were in Seattle, you'd pay even more. Yeah.
The ability is due to wages.
Right.
Right.
That's correct.
We have low wages here. High, but not.
Exactly. Shane's saying that the wages is what makes it unaffordable, and that's exactly what they did. So in this study, they took the median income and the median price of homes and compared those 2 data points. And one of the other things that we've already even talked about and seen is the flood of folks moving here from other places within the face of COVID. And in that wake of COVID, the other thing that happened was the huge shift to work at home being even more of a thing. And so with that, I don't even know if our median income here in Idaho, if that's a real number. It's pricing out Idahoans, but if you're coming here and making wages from another state, then, and so your choice is to live and work in San Francisco or live in Boise and work in San Francisco. Now you've still got an advantage to coming to Idaho. So to both of your points.
Working home from Seattle.
Uh-huh.
And then we also have dollars because
Mm-hmm.
so we're having to raise
Mm-hmm.
inflation.
Inflation in full force, says Arla, and I don't know how well the Zoom folks can hear, which is why I'm getting all cozy and up to you as you're speaking in case they can pick it up on the microphone. But Arla is saying that, yeah, the folks moving from Seattle want better wages than Boise has to offer. The folks getting out of college want better wages than we're used to offering here. And so there's upward pressure, wage pressure is building, and that is consistent to what we saw at an economic forum conference earlier this year that the Idaho Apartment Association put on, and that was what Zions Bank's data presented. Anything to add, Tyler? Yeah, and isn't that interesting? Tyler Porter is a lender with OneTrust, and he is saying, hey, yeah, let's get that information out there. It's okay if it takes business out of my hands, because same with me. I'm helping and I'm happy to help my out-of-state clients. But at the same time, I'm like, let's stop that memo from circulating that Boise is the place to come to, even if it literally takes business out of all of our hands. And I guess it's also easy to say when everybody right now has more business than they can handle. But a lot of nods in the room with that commentary. Anything to add, anyone else? Brent?
Yeah, I guess. There's a spread.
Mm-hmm. The ratio between rents going up and single family homes, and you're saying that prices have gone up more than rents.
Yeah, more, I mean,
Mm-hmm. Well, that's the GRM.
Yeah.
That is the gross rent multiplier, the price to purchase price, the purchase price to rent ratio. And so if your theory is correct, we're going to see if the rents are not keeping up with the purchase price, the gross rent multiplier, the number gets bigger, where bigger is less favorable for investors. And that's exactly what we were seeing. But lately, we've been seeing that number since that almost that June, July spike. Now that gross rent multiplier is calming down a little bit. So yeah, you're exactly right. We've been watching that figure. It's a metric, and it's been moving around. And almost any argument you can make about gross rent multiplier right now could be correct, because it was going up and then it started keeping up, and then now it's kind of going. The numbers getting a little bit lower, where the rents are higher and the purchase prices have calmed down. So let's see, did we get everything on this? Yeah. I will certainly work on that. Yeah, and I'll try to repeat them and stand closer to them. Sorry, guys. Thanks for that comment. Still figuring out. It's tricky to do both, but we'll work on that. Okay. So here's what we've seen. We hit $550,000 was our median price in June. And Now we're at basically 534,000 for a median price. So those prices got pushed and pushed and pushed, and in a very short amount of time, that median came back down. Those first slides that we presented were inventory that was still on the market. So everyone's sort of adjusting to the market literally moving beneath our feet as we speak. So we've had a almost 160% increase in inventory year over year this year from last year, when things were just going absolutely bonkers. And we thought it couldn't be more bonkers, and it got more and more and more bonkers through May and June. And so, like Ty, I am a little relieved to see some sanity, just an end to the madness, maybe, except for the fact that, if you were among the sellers who got the memo, we can't necessarily look at our comps from June and expect that same price. It's a different market. So only 8 days more on market than we were seeing from last year, but days on market is going up. Now in Canyon County, that median price is $422,000. And the trends are very similar there in terms of what's happening in terms of inventory. Their inventory went up more than 200% year over year, and their median price of homes was a little higher as well. But so we've looked at affordability in single family homes, we've looked at rents and talked about the rent to purchase price ratio. Here's an apartment affordability slide that I also got from that economic forum in this summer. Christine Cooper of CoStar presented this apartment rent affordability, and you see Boise is right there in red in the center, and that's how we compare nationwide on a scale of apartment affordability. And that's rent to household income. Again, how they're measuring affordability, the median rents to the income. And what are rents doing here locally? Tom, this slide's for you. Tom is among the investors who've seen some pushback on rent prices recently. And we're not too worried overall. And by we, I'm probably actually quoting First Rate Property Management right now, which isn't me, but they're a great resource for me. And so I get a lot of my information from them. Tony Dross founded that company, but Melissa Sharon, the president of that company and owner now, talked about how there's a little bit of pushback in rent. Things cool down seasonally speaking, and she doesn't see anything out of seasonal norms happening. Rents have continued to push, but at this time of year, single family home vacancies and rental rates, they're just never really there, never as good as they are in summer. So they have a very strategic approach to their leasing cycles to capitalize on those higher rents. And if you are renting something in the off season, it is a really good idea to understand that your rents are going to be different than they are going to be in spring or summer. And so a lot of times that's a conversation I'll have with folks who are buying something that's closing in winter. It's a non-recurring cost if you get it onto that spring to summer ratio. It's a one-time cost, so plug it into your initial numbers. Don't necessarily judge the whole investment based on that. However, when the builder of your new single-family rental says, no, it's not going to be ready in January, it's going to be ready in April, you can go, yay, that's still within my 180-day window, and that's going to be a much better renting cycle for me. So typically, rents in Canyon are lower. Rents in Canyon County have been doing a good job pushing up toward rents in Ada County, but also this NARPM data, which we're very grateful for, is not perfect data. So we need to see things really trend out a couple cycles, a couple quarters before we're going to say, yeah, you get more for a 2-bedroom in Canyon. I think there's just glitches in the data depending on who answers the survey and depending on who's marketing, because they also take into account units being marketed, and units being marketed haven't been sold. So, it hasn't been proven. So rents were up for multifamily, $84 a unit in multifamily between Q2 and Q3, and they were up about 40. I think it was 24. Wait, what? Multifamily and Ada rents were up. Rents went down 24 a unit in Ada for single family homes. That's that seasonal slowdown. And then in multifamily rentals, we're seeing 2 bedrooms in the $1,300 range. You know, that's going to be old and new. There's going to be a balance. That's an average. So the new kind of middle ground for 2 bedrooms is going to be around $1,300 in multifamily, and somewhere between 14 and 17 in single family. And of course, if you get into 5 bedrooms, things get crazy because there's just not a ton of those. So single family rentals, you're looking at a 4 bedroom is going to glean a lot more rent than a 3 bedroom. That's something we've noticed. And that house I presented in the early side of things was a 3 bedroom plus a bonus. So maybe you market that as a 4 bedroom, maybe you build out a closet, but a 2019 4 bedroom is something that I consider heavily for when I'm trying to help someone buy a single family home investment property. And then these vacancies, of course, you've probably experienced some recently. If we have a vacancy right now, it's taking a little longer to fill. But do note, those arrows there are Q3 2020 versus Q3 2021. So our vacancy is still below where it was in 2020. So our rental market has been hot, 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 and isn't having and doing the same things as our single family home sales market, where rents, we're expecting them to create, vacancy, we're expecting to creep up to a little bit more of a normal plateau that is maybe a little reasonable. But yes, Shane. Why is 5 bedroom data, Diana, is really skewed. That's Diana with Mountain West IRA. There's just not a whole lot of 5 bedroom data, but you'll see the 5 bedrooms that exist are more in Canyon than in Ada, and the higher price for 4 bedrooms is in Ada. If you have a 5 bedroom in Ada, you know, yeah, I don't really know. I think that's the real answer. There's just not a lot of 5 bedrooms, but it's a darn good question without an answer. Sorry. Yes, Brent has a question. I'm going to come by you, Brent, so maybe they can hear it.
So, experiencing firsthand the slow
Mm-hmm.
we renovated on the leases roll over in about a month ago.
But yeah, fall and December is going to be slowest. Mid-November through mid-January. So what do we have going on? Ada County, duplex and fourplex trends, a slight increase in inventory, decrease in pending, and sales increased a little bit. But the name of the game, the supply and demand metric here is absorption, and we are now more than 1 month in all categories. So that supply and demand has been shifting, providing more supply. And Canyon County duplexes are still down pretty stinking low in less than a month. And so it's basically taking a little longer to sell, but things are still selling. I'm seeing the multifamily market and investors are still hungry. There's still a lot of cash to be spent. Single family markets acting a little more skittishly. And then Tony Dross's analysis is showing that those gross rent multipliers that we were talking about earlier, Brent, is it's dropped 2 consecutive months in a row, which means that the price to rent ratio is closed a little bit and it's less favorable for investors and more favorable for, no, strike that, reverse it. It's more favorable for investors because gross rent multiplier has dropped consecutively 2 months in a row. So rents are still going up and the purchase price has had downward pressure. Sorry, guys. And this puts us at the lowest since February of this year. We're finally below a 200 gross rent multiplier. And to put that into perspective, for those of you who go on bigger pockets or do the 1% rule, a 100 gross rent multiplier is the equivalent of the 1% rule. And so we're all the way at 200, but we've dropped and we had surpassed 200. Average price of a fourplex, $852,000 at this point in time, old and new. Days on market, still below 7, which is historically low. And cap rates have are at 3.67% based on actual rents. So while we're like, yeah, that's below 4, I still tell people we're at like 4-ish for a cap rate because most frequently there's room in those rents. If they were not rented right away, there's room in those rents. People have not kept up with their rents. And so that's why we're running 2 pro formas, market and actual. And this is what the actual fourplexes look like that are on the market right now. There's some brand new ones in Nampa on Brassy Cove. Those are all hitting at $850. There's a whole bunch of those for sale at $850 each. And those are newer properties. There's in Boise, there's a Douglas fourplex that went off and back on the market. So it's back on there. Plummer at $925 is in Star. It's a nice fourplex, but it is in Star. And then those 2501 Anderson properties, that's in the north end, and that requires a lot of money right now. I mean, my napkin number, if you bought all 3, which is 2 fourplexes and a triplex, that's 11 units. I was like throwing a $300,000 as my napkin number on that one and saying that the price, like I'd buy that all day till Tuesday for 2.1, but it's 2.4, and that's with the price drop they just had. So just not feeling compelled to bite off that much labor right now. And then, yeah, so that's kind of what we're seeing in the fourplex. And the 5+ gets a big fat meh. I'm not even putting it up there. Forget it. We don't care. You're not getting any economy of scale for buying 5+ units at this time. There's none. You're actually getting a lower cap rate or a lower quality, it feels like, just because there's no supply in that particular market. So that's the market update, guys. I hope you got your questions answered.